Chapter 7, The Company Audit. In this chapter, we will look at the following topics: Summary of Sections, Appointment of Auditor, Rotation of Auditors, Section 139(2), Removal, Resignation of Auditor and Giving of Special Notice, Eligibility, Qualifications, Disqualifications of Auditors, Section 141, Auditors' Remuneration, Section 142, Powers and Duties of Auditors and Auditing Standards, Section 143, Audit of Branch Office Accounts, Auditor not to render certain services, Section 144, Punishment for contravention, Section 147, or punishment for non-compliance. Provisions relating to Audit Committee, manner and procedure of selection and appointment of auditors, ceiling on number of audits, audit report, SA 700, unqualified report, modified reports, disclosure in the auditor's report, joint audit, SA 299, responsibility of joint auditors. Summary of Sections 138, Internal Audit, already discussed in earlier chapters. 139, Appointment of Auditors. 140, Removal, Resignation of Auditor and Giving of Special Notice. 141, Eligibility, Qualifications and Disqualification of Auditors. 142, Remuneration of Auditors. 143, Powers and Duties of Auditors and Auditing Standards. 144, Auditor not to render certain services. 145, Auditors to sign audit reports, etc. 146, Auditors to attend general meeting. 147, Punishment for contravention. And 148, Central Government to specify audit of items of cost in respect of certain companies. Appointment of Auditor. Particulars: non-government company, government company. Unlisted company. Non-government company can be further classified into unlisted company, listed or specified company. Appointment of first auditor. After incorporation, appointed auditor will hold the office till the conclusion of first AGM, Section 139, 6 and 7. By Board of Directors, within 30 days from the date of registration. In case of failure on the part of Board of Directors to appoint first auditor, then the auditor is appointed. Then the auditor is appointed by members at EGM or Extraordinary General Meeting within 90 days of information. Listed or specified company by Board of Directors within 30 days from the date of registration. In case of failure on the part of Board of Directors to appoint first auditor, then the auditor is appointed by members at EGM or Extraordinary General Meeting within 90 days of information. Government company by CAG within 60 days from the date of registration. In case of failure on the part of CAG to appoint first auditor, then the auditor is appointed by Board of Directors within the next 30 days. In case even the Board of Directors fails to appoint first auditor, then the auditor is appointed by members at EGM or Extraordinary General Meeting within 60 days of information. Auditors at first AGM. The written consent and the certificate appointment shall be in accordance with the conditions shall be obtained from the auditor. By members, to hold office till the conclusion of 6th AGM, subject to ratification by members at every AGM. By members, for maximum one term of 5 out of 10 consecutive years, cooling off period of 5 years before next appointment. By CAG, within 180 days from 1st April. Subsequent auditors. By members, to hold office till the conclusion of 6th AGM, subject to ratification by members at every AGM. By members, for maximum one term of 5 out of 10 consecutive years. By CAG, within 180 days from the commencement of the year till the conclusion of AGM. Casual vacancy due to resignation, other reasons. By members, within 3 months of recommendation by board until next AGM. By board of directors, within 30 days, auditor will hold the office till AGM. By CAG, within 30 days. In case the CAG fails to appoint auditor in the prescribed period, then the appointment is done by board of directors within 30 days. Case study 1. At the AGM of ICI Limited, Mr. X was appointed as statutory auditor. He, however, resigned after 3 months since he wanted to give up practice. State how the new auditor will be appointed by ICI Limited. As per section 139(8), any casual vacancy in the office of an auditor in case of company other than a government company be filled by the board of directors within 30 days. If such casual vacancy is as a result of the resignation of an auditor, such appointment shall also be approved by the company at a general meeting convened within 3 months of the recommendation of the board, and he shall hold office till the conclusion of the next annual general meeting. Case study 2. The first auditor of a government company is appointed by board of directors. Comment. Section 139(7) provides that in the case of a government company or any other company owned or controlled directly or indirectly by the central government or by any state government or governments, or partly by the central government and partly by one or more state governments, the first auditor shall be appointed by the Comptroller and Auditor General of India within 60 days from the date of registration of the company. Only in case of failure to appoint auditor within the stipulated time by CAG, the Board of Directors is allowed to appoint the first auditor. Hence, in normal circumstances, the appointment of first auditor of a government company by the Board of Directors is null and void. Rotation of auditors, section 139(2). The 2013 Act has introduced the concept of rotation of auditors as well as audit firms. It states that in case of listed companies and other classes of companies as may be prescribed, it would be mandatory to rotate auditors. Every 5 years in case of individual appointed, every 10 years in case of appointment of an audit firm. Classes of companies shall mean excluding one-person companies and small companies. All listed companies, unlisted companies with a paid-up share capital greater than 10 crore rupees, private limited companies with a paid-up share capital greater than 20 crore rupees, all companies, public borrowings from financial institutions, banks or public deposits greater than 50 crore rupees. A uniform cooling-off period of 5 years from the completion of term is set in both the cases. Maximum term, auditor individual 5 years, audit firm 5 years plus 5 years. Cooling-off period 5 years. Incoming audit firm cannot have any partners common with outgoing audit firm, as on the date of appointment. Incoming firm cannot belong to same network as outgoing audit firm. If certifying partner joins another audit firm, that firm is ineligible for 5 years. The 2013 Act has allowed a transition period of 3 years for complying with the requirements of the rotation of auditors, section 139(2) of the 2013 Act. Further, the 2013 Act also grants an option to shareholders to further require rotation of the audit partner and staff at such intervals as they may choose. Section 139(3) of the 2013 Act. In case of individuals, if the number of consecutive years for which an individual auditor has been functioning as auditor in the same company in the first AGM held after 1st April 2014 is 5 years or more, then maximum number of consecutive years after 1st April 2014 for which he may be appointed in the same company after transitional or grace period will be 3 years. Hence, aggregating the period which the auditor would complete in the same company will be 8 years or more. Similarly, if the number of consecutive years is 4 years, then maximum number of consecutive years after 1st April 2014 will be 3 years. Hence, aggregating the period which the auditor would complete in the same company will be 7 years. So on and so forth. In case of audit firms, if the number of consecutive years for which an audit firm has been functioning as auditor in the same company in the first AGM held after 1st April 2014 is 10 years or more, then maximum number of consecutive years after 1st April 2014 for which they may be appointed in the same company after transitional or grace period will be 3 years. Hence, aggregating the period which the firm would complete in the same company will be 13 years or more. Similarly, if the number of consecutive years is 9 years, then maximum number of consecutive years after 1st April 2014 will be 3 years. Hence, aggregating the period which the firm would complete in the same company will be 12 years. So on and so forth. Manner of rotation of auditors by the companies on expiry of their term. Rule 6 of the Companies Audit and Auditors Rules 2014 prescribes the manner of rotation of auditors on expiry of their term, which is given below. The procedure depends upon whether audit committee is required to be constituted or not. If constitution required, then the committee shall recommend to the board the name of the auditor who may replace the current auditor on expiry of his term. The board shall consider the same and make its recommendation to the members. In cases where committee not required, then the board shall itself recommend to the members. Removal, resignation of auditor and giving of special notice. Removal of auditors, Section 140. By member of Annual General Meeting. By Comptroller and Auditor General of India. Previous central government approval and special resolution at General Meeting. File a statement of reasons within 30 days with Company and Registrar of Companies. File a statement of reasons within 30 days with Company and Registrar of Companies and Comptroller and Auditor General of India. Removal of auditor before expiry of term. The process is as follows. Pass the board resolution. Apply to central government. Form of application will be made in the form ADT 2, accompanied with fees, within 30 days of board resolution. On receipt of approval from central government, pass a special resolution of shareholders within 60 days of approval of central government. Before taking any action, the auditor concerned shall be given a reasonable opportunity of being heard. Appointment of auditor other than retiring auditor, Section 144. Procedure is as follows. Special notice required for a resolution at AGM. Than retiring auditor or providing expressly that the retiring auditor shall not be reappointed, except on case where the auditor has completed his maximum term of 5 out of 10 years as the case may be. On receipt of notice of such a resolution, the company shall send a copy thereof to the retiring auditor. Where notice is given of such a resolution, the retiring auditor makes a representation in writing to the company and requests its notification to members of the company. The company shall, unless the representation is received by it too late for it to do so. In any notice of the resolution given to members of the company, state the fact of the representation having been made, and send a copy of the representation to every member of the company to whom notice of the meeting is sent, and if a copy of the representation is not sent as aforesaid, the auditor may, without prejudice to his right to be heard orally, require that the representation shall be read out at the meeting, provided that if a copy of representation is not sent as aforesaid, a copy thereof shall be filed with the registrar. Casual vacancy by resignation. As per section 142, the auditor who has resigned from the company shall file within a period of 30 days from the date of resignation a statement in the prescribed form ADT 3 with the company and the registrar. In case of the companies referred to in section 139(5), that is subsequent auditor of government company, the auditor shall also file such statement with the Comptroller and Auditor General of India, indicating the reasons and other facts as may be relevant with regard to his resignation. In case of failure, the auditor shall be punishable with fine which shall not be less than 50,000 rupees, but which may extend to 5 lakh rupees as per section 143. Other important provisions regarding appointment of auditors. A retiring auditor may be reappointed at an annual general meeting if he is not disqualified for reappointment, he has not given the company a notice in writing of his unwillingness to be reappointed, and a special resolution has not been passed at the meeting appointing some other auditor or providing expressly that he shall not be reappointed. Where at any annual general meeting no auditor is appointed or reappointed, the existing auditor shall continue to be the auditor of the company. Eligibility, qualifications and disqualifications of auditors. Section 141. Eligibility and qualifications as per section 141(1) and 2. Only a chartered accountant individual or a firm where majority of partners practicing in India are chartered accountants can be appointed as auditor. Where a firm including a limited liability partnership (LLP) is appointed as an auditor of a company, only the partners who are chartered accountants shall be authorized to act and sign on behalf of the firm. Disqualifications as per section 141(3). Read with Rule 10. A body corporate except LLP. An officer or employee of the company. A person who is a partner or who is in the employment of an officer or employee of the company. A person who or his relative or partner is holding any security of or interest in the company or its subsidiary or of its holding or associate company or a subsidiary of such holding company, provided that the relative may hold security or interest in the company of face value not exceeding 1 lakh rupees, provided that the condition of rupees 1 lakh shall, wherever relevant, be also applicable in the case of a company not having share capital or other securities. If any relative acquires interest exceeding the said limit after appointment, the auditor will have to take corrective measures to reduce such interest within acceptable limit within 60 days of such acquisition or interest. Is indebted by more than 5 lakh rupees to the company, subsidiary, holding, co-subsidiary and associate, has given security guarantee by more than 1 lakh rupees to the company, subsidiary, holding, co-subsidiary and associate. A person or a firm who, whether directly or indirectly, has business relationship with the company or its subsidiary or its holding or associate company or subsidiary of such holding company or associate company of such nature as may be prescribed. A person whose relative is a director or is in the employment of the company as a director or key managerial personnel. A person who is in full-time employment elsewhere, or a person or a partner of a firm holding appointment as its auditor, if such person or partner is at the date of such appointment or reappointment holding appointment as auditor of more than 20 companies. A person who has been convicted by a court of an offence involving fraud and a period of 10 years has not lapsed from the date of such conviction. Any person whose subsidiary or associate company or any other form of entity is engaged as on the date of appointment in consulting and specialized services as provided in Section 144. Where a person appointed as an auditor of a company incurs any of the disqualifications mentioned in subsection 3 after his appointment, he shall vacate his office as such auditor, and such vacation shall be deemed to be a casual vacancy in the office of the auditor. Now let's have a look at some examples. Example 1. If Mr. A is holding security worth rupees 10,000 of ABC Limited, is he eligible for the position of auditor of ABC Limited? As per section 141(3)(d)(1), an auditor is qualified to be appointed as an auditor if he or his relative or partner holding any security of or interest in the company or its subsidiary or of its holding or associate company or a subsidiary of such holding company or a subsidiary of such holding company. In the present case, Mr. A is holding security of 10,000 in the ABC Limited. Therefore, he is not eligible for appointment as an auditor of XYZ Limited. Example 2. If in the previous example, instead of Mr. A, one of his relatives, Mr. B is holding security worth 10,000 rupees, will Mr. A be eligible for the position of auditor in ABC Limited? As per section 141(3)(d)(1), an auditor is disqualified to be appointed as an auditor if he or his relative or partner holding any security of or interest in the company or its subsidiary or of its holding or associate company or a subsidiary of such holding company. Further, as per proviso to this section, the relative of the auditor may hold the securities or interest in the company of face value not exceeding rupees 1 lakh. In the present case, Mr. B, relative of Mr. A and auditor, is having securities of 10,000 rupees face value in ABC Limited, which is as per requirement of proviso to section 141(3)(d)(1). Therefore, Mr. A will not be disqualified to be appointed as an auditor of ABC Limited. Auditor's Remuneration, Section 142. Remuneration of auditor is fixed by: for first auditor by Board of Directors, for others it is fixed in general meeting or in such manner as may be determined therein. Remuneration is equal to fees plus expenses, if any, incurred by the auditor in connection with the audit of the company, plus any facility extended to him. It does not include any remuneration paid to him for any other service rendered by the auditor. Therefore, the remuneration will also include any facility provided to the auditor. Powers and duties of auditors and auditing standards. Section 143. Powers. The auditor has the right to access the books of accounts and vouchers of the company at all times, whether maintained at registered office or not, including the books of accounts of all the subsidiary companies. He is also entitled to require from the officers of the company such information and explanation as he may consider necessary for the performance of his duties as auditor, Section 143(1). To inquire from the officers of the company relevant information and explanations. Right to receive notices and to attend general meeting. It is not his duty to attend or to take part in the discussion. Such a right extends only to meeting of the members and not to meeting of directors. Right to report to the members of the company on the accounts examined by him. The auditor shall make a report to the members of the company. Right to lien. Auditor can exercise lien on books and documents placed at his possession by the client for non-payment of fees for work done on the books and documents. The following points should be kept in mind. Documents retained must belong to the client who owes the money. Documents must have come into possession of the auditor on the authority of the client. They must not have been received through irregular or illegal means. In case of a company client, they must be received on the authority of the board of directors. The auditor can retain the documents only if he has done work on the documents assigned to him. Some of the documents can be retained which are connected with the work on which fees have not been paid. Remuneration. The auditor has the right to receive remuneration for the services rendered. Notice of removal. The auditor has the right to receive notice of removal. He also has the right to give representation to the shareholders of the company whenever company proposes to remove the auditor. Powers or rights of Comptroller and Auditor General of India. The Comptroller and Auditor General of India shall, within 60 days from the date of receipt of the audit report, have a right to conduct a supplementary audit of the financial statement of the company by such person or persons as he may authorize in this behalf, and comment upon or supplement such audit report. And comment upon and supplement such audit report, provided that any comments given by the Comptroller and Auditor General of India upon or supplement to the audit report shall be sent by the company to every person entitled to copies of audited financial statements, that is, every member of the company, to every trustee for the debenture holder of any debentures issued by the company, and to all persons other than such member or trustee, being the person so entitled, and also be placed before the annual general meeting of the company at the same time and in the same manner as the audit report. Test audit. The Comptroller and Auditor General of India may, in case of any company covered under subsection 5 or subsection 7 of section 139, if he considers necessary by an order, cause test audit to be conducted of the accounts of such company. Duties. Duty of auditor to inquire on certain matters. Whether loans and advances made by the company on the basis of security have been properly secured, and whether the terms on which they have been made are prejudicial to the interests of the company or its members. Whether transactions of the company which are represented mainly by book entries are prejudicial to the interests of the company. Where the company, not being an investment company or a banking company, whether so much of the assets of the company as consist of shares, debentures and other securities have been sold at a price less than that at which they were purchased by the company. Whether loans and advances made by the company have been shown as deposits. Whether personal expenses have been charged to revenue account. Where it is stated in the books and documents of the company that any shares have been allotted for cash, whether cash has actually been received in respect of such allotment, and if no cash has actually been received, whether the position as stated in the account books and the balance sheet is correct, regular, and not misleading. The auditor should make a report to the members in case he finds answer to any of these matters in adverse. Duty to sign the audit report. The person appointed as an auditor of the company shall sign the auditor's report or sign or certify any other document of the company in accordance with the provisions of subsection 2 of section 141. Duty to comply with auditing standards. Every auditor shall comply with the auditing standards. The central government may prescribe the standards of auditing or any addendum thereto as recommended by the Institute of Chartered Accountants of India, constituted under Section 3 of the Chartered Accountants Act 1949, in consultation with and after examination of their commendations made by the National Financial Reporting Authority. Duty to audit report. The audit report shall state whether he has sought and obtained all the information and explanations which to the best of his knowledge and belief were necessary for the purpose of his audit, and if not, the details thereof and the effect of such information on the financial statements. Whether, in his opinion, proper books of accounts as required by law have been kept by the company so far as appears from his examination of those books, and proper returns adequate for the purposes of his audit have been received from branches not visited by him. Whether the report on the accounts of any branch office of the company audited under subsection 8 by a person other than the company's auditors has been sent to him under the proviso to that subsection, and the manner in which he has dealt with it in preparing his report. Whether the company's balance sheet and profit and loss account dealt with in the report are in agreement with the books of accounts and returns. Whether, in his opinion, the financial statements comply with the accounting standards. The observations or comments of the auditors on financial transactions or matters which have any adverse effect on the functioning of the company. Whether any director is disqualified from being appointed as a director under subsection 2 of section 164. Any qualification, reservation, or adverse remark relating to the maintenance of accounts and other matters connected therewith. Whether the company has adequate internal financial control system in place and the operating effectiveness of such controls. Such other matters as may be prescribed. Rule 11 of the Companies Audit and Auditors Rule 2014 prescribes the other matters to be included in the auditor's report. Whether the company has disclosed the impact, if any, of pending litigations on its financial position in its financial statement. Whether the company has made provision as required under any law or accounting standards for material foreseeable losses, if any, on long-term contracts, including derivative contracts. Whether there has been any delay in transferring amounts required to be transferred to the Investor Education and Protection Fund by the company. Duty to report on frauds. If an auditor of a company has reason to believe that an offence involving fraud is being or has been committed against the company by officers or employees of the company, he shall immediately report the matter to the central government. The auditor should report to central government of the fraud not later than 60 days of his knowledge and after following the procedure indicated herein below. Auditor shall forward his report to the board or audit committee immediately after he comes to know of the fraud, seeking their reply or observations within 45 days. On receipt of such reply or observations, the auditor shall forward his report and the reply or observations of the board or the audit committee, along with his comments, to the central government within 15 days of receipt of such reply or observations. In case the auditor fails to get any reply or observations from the board or the audit committee within the stipulated period of 45 days, he shall forward his report to the central government along with a note containing the details of his report that was earlier forwarded to the board or the audit committee, for which he failed to receive any reply or observations within the stipulated time. The report shall be sent to the Secretary, Ministry of Corporate Affairs in a sealed cover by registered post with acknowledgement due or by speed post followed by an email in confirmation of the same. This report shall be on the letterhead of the auditor containing postal address, email address and contact number and be signed by the auditor with his seal and shall indicate his membership number. The report shall be in the form of a statement as specified in Form ADT 4. If the auditor fails to follow the above-mentioned steps, he shall be punishable with fine which shall not be less than 1 lakh rupees, but which may extend to 25 lakh rupees. Duty to report on any other matter specified by central government. The central government may direct that the auditor's report shall also include a statement on such matters as may be specified. Duties and powers of the company's auditor with reference to the audit of the branch and the branch auditor, details given later. Duty to state the reason for qualification or negative report. Where any of the matters required to be included in the audit report is answered in the negative or with a qualification, the report shall state the reasons therefore.